We have quite an exciting lineup of speakers. We'll be joining by JICA, by Megumi Muto. We have Casper Havinga of FOUNT, the fund manager for Agri3, and then we have Joan, Larrea of Convergence Finance, of course, quite well known as the industry body of blended finance. These three speakers will first share a bit on their activities in the blended finance space, and then afterwards we'll enter a discussion about what tools we have available, how to best utilize, for example, donor money or patient capital to incentivize commercial players to enter the space. So it's quite an interesting topic. Do post your questions in the chat box if there are specific transactions or deals or ways that you would be interested in. But without further ado, I would like to kick off the sessions. The first couple of introductions will be from Megumi from JICA. Megumi, the floor is yours. I will man the slides for you.
Okay. Thank you very much, Rick. Is the audio okay?
Yep.
Perfect. Okay, very good. I think this is the first time JICA participates in this very important AFI forum. Thank you for the great opportunity. Just for those who don't know our organization, JICA, we are the aid agency and DFI of the Japanese government. We provide ODA loans to partner countries, plus there is a window for private sector, which we call the private sector investment finance, and then we do the technical assistance and grant aid, all for sustainable development impact. Next slide, please. Thank you. Our impact range from health, water, power, human capital, build back better, and also natural capital, covering 150 partner countries. We can follow these numbers that are shown on the table, as for the last 30 years, we've been working on the impact measurement and monitoring. Most of these impacts are products of our government-to-government collaboration in the past, but increasingly we are trying to team up with the private sector, including blended finance. Next slide, please. Next. Thank you. Okay, let me talk about a classical blended finance case that we have developed with the USAID in the Philippines. It is called the Philippine Water Revolving Fund and was established in 2008 with a great effort together with the Development Bank of the Philippines and the Department of Finance of the Philippines. The end goal was to support water districts all over the Philippines to extend water and sanitation services. A revolving fund was set up in the Development Bank of the Philippines. JICA has provided concessional sovereign finance there, and USAID provided guarantee through LGU Guarantee Corporation, so that private financial institutions could come in and co-finance. For example, in 2010, the city of Puerto Princesa in Palawan borrowed from this scheme for amount of US dollar 30 million. And the Bank of the Philippine Islands, a private bank in the Philippines, co-financed 25%. All in all, as of 2017, 200,000 new households were connected. So this was the real impact. I wish to emphasize in the next slide that behind this scheme, there was a solid policy of the government of the Philippines. The key is that there was a clear framework for support, ranging from non-credit worthy, pre-credit worthy. They will be getting subsidy, technical assistance to improve credit worthiness. For the semi-credit worthy group, they will be covered with a blended finance. I emphasize this because there was a system to use the best of the scarce government money allocated to where it is most needed. And there was also a philosophy that support is transitory, not permanent. I remember hearing about this sector reform idea at the Department of Finance in Manila when Joan, our co-speaker, was engaged in the privatization of the largest water utility in Metro Manila. So we were working simultaneously. Lessons learned. Sector reform and financial scheme should go together for blended finance. Next slide, please. Thank you. Lastly, let me mention something more recent. This is a co-lending scheme to a Vietnam Prosperity Joint Stock Company, emphasizing inclusion, in particular gender. Since 2019, JICA has been working on a technical assistance for the Vietnam Women's Union and the financial service providers to promote gender responsive finance. And this activity was a precursor to this finance scheme in which we involved ADB and SMBC of Japan. The nice thing, additionality here is that with SMBC, we entered in a sustainable finance framework, and this was to share our impact measurement and management experience to SMBC. So we are trying to expand the players in this ecosystem. Thank you very much. I stop here.
Thank you, Megumi. I think we'll first take it through to the next presentation by Casper from Agri3 Fund. Casper, are you there?
Yes.
Yes, I will man the slides for you, so just give me a nod.
Great, thanks, Rick. Now, thanks for giving the opportunity to also show a bit about a real-life blended finance example, which is the Agri3 Fund. And let me start with the background of the fund, so the challenge that we're trying to solve. And as we all know, the increase in population and consumption have led to a rapid expansion of agricultural production worldwide, and that still will need to grow a lot to feed the growing population. So there's a huge challenge there. But at the same time, this increase in production has also had a lot of negative side effects. We all know about the deforestation effects and the environmental degradation that can result from agricultural production. So to address these challenges, obviously investments are needed. Investments to change to a system of efficient, productive production, but in a more sustainable way. Improving soils that are degraded while still protecting and improving the remaining forests that are there. And of course, these investments require appropriate financing, appropriate funding. But for many commercial banks, and especially in developing countries, it's difficult to finance this because of the perceived risk of the investment, but also because of the long tenors that are often needed to finance this transition of production systems. So to address this challenge, United Nations Environment Programme and Rabobank came together a couple of years ago and later joined by partners IDH and FMO, created the Agri3 Fund. If you go to the next slide, the mission of Agri3 is to mobilize 1 billion of finance to accelerate forest protection, implement sustainable agricultural production systems, while at the same time improving rural livelihoods to people that are living in these areas and depending on rural livelihoods. And we do this by participating with financial institutions in projects from agribusiness companies that have a positive impact on either accelerating forest protection or improving sustainable agricultural production, or a combination of forest protection and production, while in all cases having a positive effect on rural livelihoods. So we can go to the next slide. That shows the overall setup of the fund. Agri3 is unique in its approach to mobilize investment for sustainable agriculture and forest protection in a way that our ultimate beneficiaries are the actual projects of farmers, either small or large, either directly financed or financed through a supply chain company in between. But instead of financing these companies directly, we work together with our partner banks, as we call them. So in that way, we intend to leverage the existing networks, the existing knowledge and finance that these banks already have in their markets to really be able to deliver impact at scale. So the idea is how it works, that our partner banks, they work with the fund and their client networks to identify potential projects and clients in their network that have investments in these areas and that can be supported by the bank. But where part of the financing structures that are needed to support these investments fall outside of the risk appetite of the bank or outside of the risk acceptance criteria because of a higher project risk or a long tenor that's needed that the bank cannot provide, then Agri3 can provide support in the form of a specific guarantee, de-risking a part of the financing that needs support. For example, we can cover a longer tenor tranche of a loan of the partner bank, or we can provide a first loss guarantee for a facility. So in that way, Agri3, we can provide guarantees of ranging between $2 to $50 million, but it can also be in local currency per project, thereby catalyzing up to 50 million of financing for a project from the bank. So all projects will be reviewed by Agri3, and also the impacts will be measured within our environmental, social, and impact framework. So this means that we work closely with the bank to analyze the actual projects, to establish that the impacts that are there, to also see the risks that might be there, and even agree on a specific environmental, social action plan together with the bank and the client to address these risks. But at all times, the bank will remain in control of the relationship. I mean, it's their clients. They are also managing on our behalf our part of the exposure, but with unique support from Agri3 on the ENS and impact side. And another unique element that you can see also here is the technical assistance funds that we have. This is managed by IDH, the Dutch Sustainable Trade Initiative, and can provide project support, either pre-investments to make the project ready to be invested in by the bank and Agri3, or post-investments to improve the impacts, to foster innovation, and also to share knowledge between farmers, so that it's not only realized within the specific project, but also shared with others. And so Agri3 is a blended finance fund. And as you can see also here, we're blending sort of in two places. So on the fund side, our investors are a combination of concessional investors in the capital preservation tranche, that's the Dutch government in our case, but also commercial investors, in our case Rabobank, who has invested in the debt tranche of the fund. But in our investment side, we also use our guarantees to catalyze commercial financing from the commercial banks. And in that way, our intention is to mobilize or catalyze up to 1 billion of financing with 300 million of guarantees issued by Agri3. So of course, I can imagine that you will be interested to understand where are we now, how far are we from the 1 billion? Well, of course, it's not easy to start a fund in the middle of a pandemic. So the fund was launched in 2020. We did our first deals by the end of 2020. And to date, we have invested almost 25 million of guarantees, thereby catalyzing up to almost 50 million of loans. And also, we have developed a good pipeline of deals with our main launching partner bank, which is Rabobank. But we're also in discussions with several potential other partner banks to expand into other regions, especially the Asian region, which also is really interesting for us as we see good opportunities in countries like India and Indonesia to play a role there. At the same time, we're also still in discussions with different investors to be able to further increase our portfolio also with sufficient capital on the investment side. So maybe to end on the final slide, I wanted to show two examples of deals that we have been supporting to give a bit more flavor of what we're doing. So one project is in China, where we provided a 50% guarantee to a 3-year working capital facility that was provided by Rabobank to an agricultural input provider in the Chongqing area. And this company was setting up a program to support real small-scale farmers to move to a more profitable chili pepper crop. So they provided these farmers with inputs, training, an offtake, a market for their products. And Agri3 supported this project also with a technical assistance grant to develop a sustainable production plan for these farmers. So this project is now 1 year on their way and has established its first production and good results, and is now further expanding into the second year. Another example is in Brazil, where we worked with the branch of Rabobank there to provide a 10-year loan to a cattle farmer, whereby the longer tenor part of the loan was covered by Agri3, because Rabobank can only do loans up to 7 years in Brazil. And this loan allowed this farmer to make real long-term investments in restoring and protecting forest reserves within their farm areas, but at the same time also investing in renovation of degraded pasture lands on their farms, which enables intensification of cattle production in the lands, which has potential carbon benefits, but also reduces pressure on the amount of land that you need to produce. So I think I will leave it at this for now with these examples, and of course, happy to expand more if there are questions. Thank you.
Thank you so much, Casper. Interesting project going on, interesting approach. I think we'll first do the final introduction of Joan, and then we'll take it into a discussion. Joan, are you there?
I am. Can you hear me well?
Loud and clear.
Okay, great. Thank you. And from my perspective, a very early good morning to everybody. I'm calling in from Washington, D.C. this morning. So what Megumi and Casper have both just described is classic blended finance, the catalytic use of concessional resources to try to stimulate private sector investment into places where it wouldn't normally go, such as agribusiness at times and water definitely. My name is Joan Larrea. I'm going to give you we're going to back up the aperture, and I'm going to give you a field level view at the kind of work that people like Megumi and Casper are doing. So Convergence, very briefly, is the global network for blended finance. We operate on a membership model, and we have members from across the capital spectrum. One of the things we do every year is to put out a State of Blended Finance report, which is available publicly. And some of the data I'm about to show you live there and also live in live updated form on our website in aggregate form. So let me go ahead to the first slide, please. Thank you. So we look every year at how many transactions in the emerging markets happen in blended form, and then we look at what the patterns are. So this bar chart shows you for the past decade or so the number of transactions that we are seeing in blended finance, and the number stayed the same actually in 2020, except that the volume of money going into blended transactions in that COVID environment dropped precipitously. A lot of blended finance happens in fund form, and our guess is that a lot of fund managers went ahead with a smaller first close and this marched on. So Casper's description of how hard it is to do a fund in a COVID environment is definitely true. We also know that about $160 billion worth of business in total has been captured by us. I'm sure a whole lot more has happened in blended form over the past decade or so. And there are a bunch of different investors and donors involved. It's not like 2 or 3 parties. It's pretty widespread. When you look at the financial investors, which is the subject of this conference, if you look at their participation in blended finance, there are some sub-themes that emerge. One of them is that financial institutions, no surprise, tend to be debt players. They're not doing private equity funds, for example. They're more likely than other participants to do direct blended transactions, that is a project financing, a company financing, a bond financing, as opposed to a fund or any kind of superstructure blending. Almost half of their appearances in projects, about 48% of the time they are in projects, but 27% of the time you see financial institutions, they're in impact bonds, which are a very special thing. They're not actually a bond, a social impact bond or a development impact bond. And 15% of the time they're in companies. And like the rest of the field, they skew toward investing in energy, which typically is renewable energy, and in financial services. If we go to the next slide, thank you very much. So when we look geographically at the field of blended finance, the main pattern is that the most transactions tend to happen every year in sub-Saharan Africa. That is not necessarily the most amount of money, but the most frequent transactions are in sub-Saharan Africa year after year. You're seeing a set of bar charts here for each region, what has happened in a progression of 4 years. If you look in Asia, again, the subject of this conference, you'll see that it's holding pretty steady as a percentage of deals, but it's not increasing. Asia is a little different from some of the other region in that you have a very mixed range of country credit profiles. Everybody from Singapore to Myanmar is in Asia, so it's a very wide span. So it's just a bit different from say sub-Saharan Africa with a bit more pattern similarity. Next slide, please. Thought I would also show you a snapshot of who is doing blended finance. This is global. This is not Asia specific. So blended finance has a variety of actors, always the concessional types, and on the left side and this second left set of institutions, this is the more concessional money. You'll see that USAID and BMZ of Germany are very high up in our charts in number of transactions that we have seen done in blended form. Among the multilaterals and development finance institutions are IFC, FMO at the top. They're not necessarily the concessional money. Sometimes they're coming in senior and they themselves are being catalyzed by folks like, say, BMZ. Among impact investors, you'll see some familiar names, Kennyarth, which tends to go in actually on commercial terms most of the time, and Calvert. Among the purely commercial investors, you have here, we show up with a lot of banks, Societe Generale, and so forth. So you do see commercial banks quite frequently in blended finance. And finally, some of the philanthropic players that you'll see in blended finance are folks like Shell Foundation, which does disruptive early stage energy, and Rockefeller, who was very prominent. So that's just a quick look at the field. I thought it would be helpful to sketch that out for you, and then we can come back to the conversation, and I'll turn it back over to you with my thanks. You're on mute. I think you're still on mute.
Jesus. Hello, Joan. You hear me now? I'm back. Thank you for that. Thank you for running us through it. I will finish now the presentation slide and get back to the actual discussion that we're having. Maybe to kick it off with you, Joan. You mentioned the numbers, and you mentioned like quite a lot of fund managers might have first closed a smaller fund, a smaller deal first. Do you expect them now to see scalability? Is that to be expected, that we now will rocket up?
I totally, my crystal ball shattered at the invasion of Ukraine. I absolutely do not know what to expect. We have a live deal platform where our members can display transactions for other members who are investors and donors to look at. And based on that, we have a preliminary indication of a bounce back. If you just look at the number of transactions in our live site. But now we are going to see, I think, an era of increased risk perception. Capital is going to get more scarce and more expensive. On the one hand, that means that it takes a thicker blend to get anything done and a higher amount of donor dollars. On the other hand, it may mean that donors are otherwise occupied. So I don't know what to expect this year. I think at best flat amount of money going in. But this is just me this morning. We haven't really had a chance to absorb what's going on any more than anybody else has.
Yeah, it's quite volatile and unpredictable.
Yeah.
Maybe then also I would like to know, like Megumi, you mentioned that like JICA has a double role to play as on the ODA side and DFI side of things. Like, what tools do you have available to incentivize commercial lenders and investors? And what has so far proven to be the most successful one for you in the goals that you have?
Yeah, thank you very much. For the ODA side, or ODA, or I should say the agency side, we have a lot of technical assistance and some grant. And then for the private sector instrument, we have loans and equity. But of course, as you have seen, these are just the tools, and the structure are the real keys.
Mm-hmm.
And we have to have a lot of imagination on how to structure. And the platform that Joan is providing is a really a key source of information for us. Thank you very much.
And then, Casper, when designing the Agri-Tree Fund, did this also play a role then? Like how to work best with partner banks? Like how did you assess what would get them on board in this financing? Like, would it be like the TA side, is that critical? Is it the guarantee side that you focus on the guarantee and pricing the guarantee that should attract them most? Or
yeah, I think the goal of designing Agri-Tree was really not to set up a new fund that directly goes out to look for projects and invest in them, but to really use the capacity of commercial banks and use that route to make this change. But of course, I think the difference there is that there are facilities from other sources, DFIs, that they can finance financial institutions, but they still will participate on the balance sheet as a whole of the FI or in a specific portfolio. So we intended to design an instrument that can participate in actual deals, so cover a part of the risk of an actual deal, while still keeping the efficiency of using the channel of the financial institution and not creating something completely extra loan agreements and all the complexity that could be part of it. So that was the reason to design this guarantee, so that we have actually a guarantee behind the existing framework of the bank, while still being directly involved where necessary to measure the impact, to support the environmental, social side of this project. And I can say for experience, you see that setting up such a framework with a bank, of course, takes time, because you have to understand how does it work, how does it fit into the systems of the bank, that they can have the capital relief through our guarantee and all that. So that has taken some time. But once you have set up this risk participation framework that we now have, for example, with Rabobank, then it's much easier to do extra deals, because the clients, they still see their existing local law loan agreement with the bank. They don't have they have a couple of things associated to equity, but they're integrated in the existing framework and documentation of the bank. So I think that was really key for our approach to make this work.
Yeah. Joan, have you seen any new instruments or that how you say that bring something new into the space, like that work tremendously, that we should adapt to everybody? If we could tomorrow, we should?
Yeah, so I think one of the things Casper is getting at is getting to standardization and simplicity. So when you ask me about new things, I'm tempted to point out that innovation has a price, and that's complexity and slowness and unfamiliarity. I think many people in the audience want to see something that they've seen before, so they can just get on with it, put their money into work and keep going. So what we advocate for is finding things that have worked well and done down and not continuing to create. Some of the exciting things, if you have that mentality, some of the exciting things we're seeing in the market are mega deals. These are transactions where they're hitting $600-700 million. The Climate Investor One transaction, the BlackRock Climate Finance Partnership, which we had an early hand in before it became BlackRock. Those are both fund structures. But generally in the financial institutions world, the most frequent thing I think we see are actually guarantees, because that attacks the principal reason why commercial lenders, for example, aren't going into these transactions. Many of the countries themselves are unrated, and then you're asking them to go into a corporate. So I think guarantees are really important. Guarantees that are very vanilla, large transactions where many transactions can be done underneath the main framework, like what he just described. That's innovation for us. It's getting to the point where it's cookie cutter, where it's you can roll these things out into the market very quickly.
Well, maybe to add on that as an example from our experience. So I mentioned in the presentation this deal in Brazil with a cattle farmer. So that was one specific deal. But we're now developing a framework actually with Rabobank Brazil to sort of standardize this concept. So we have put a lot of time in setting a list of criteria and the steps that have to be taken and the specific things that need to be analyzed. And then basically with that framework, the bank can sort of, they have to confirm to us that this all complies with the criteria, and then they can get a sort of standard guarantee from Agri3. And that way we really hope to indeed scale up this approach as Agri3.
Yeah, the operationalizing the whole working, the process, and do it once and then repeat it.
No.
Is it maybe Megumi to bring it back to you, like JICA, also in the previous discussions we had, like you mentioned, like has quite a strong focus on the infrastructure side. Like, do you now also see activities in other SDG areas or other asset class areas? Like you mentioned the new deal in Vietnam. Is this sort of like new ground for you to cover as well?
Thank you very much. Yes, we are trying to really expand the coverage of, I should say, SDGs. For example, our technical team, I should say, the sector team, they're really coming up with their own KPIs, their own scale up kind of like a scenario, and there the blended finance will play a big role. So it's not only the infrastructure team that is doing that, it's really the education team, the sanitation team are doing that. So, well, it is still a little chicken, but we
Yeah.
hope it will grow.
Well, everything starts small, right? The things need to grow. Like, Joan, do you have like maybe personally, professionally, like an area where you think like, oh, it would be great to see more transactions, projects, programs in this area because it deserves it, or blended finance would work tremendously in this space or region? I know it's out of the blue, but
Yeah, no worries. I have all sorts of ideas, but I don't control all the money. But yes, I have all sorts of ideas. Look, if you look at the statistics and you see that financial institutions and energy are the top two places blended finance is happening, then you drill down into renewables. What you realize is that climate mitigation is being done and done frequently. So you see lots of solar projects, lots of wind, and some don't even need to be blended. They're just regular financeable projects. Adaptation is an area that's totally underserved. Natural capital, adaptation, resilience. It's a harder area to put a revenue model around and then make it investable even in blended form and then to go out to the markets. So that's an area that we're working in. We have a grant window for natural capital in East Asia Pacific, supported by our partners, RS Group of Hong Kong. And we have other things we're doing as well. But I would say adaptation is a big area. There are also related to that, life underwater, basically. We just wrote a blue, we just put out some information on the blue economy, and the SDG 14 is terribly under invested generally as well. Health and education are also very, very infrequent participants in blended finance, but there are some policy reasons behind that, as well as the fact that you have to pick and choose to find something investable in each of those fields. I mean, it's tertiary education, tertiary healthcare, or technology plays. But you also have policy issues where in some places the government and the people have taken the position they're not comfortable with private participation in some areas of those two sectors. But I would say some of those are some ideas that you might want to take away.
Yeah. Maybe Casper then also, like Joanne mentioned, the climate mitigation adaptation. There's a strong climate focus within Agri3. A chunk also on like lowering carbon footprint, decarbonization. Are there specific elements also that you would say like that work on that adaptation side, like especially saying that the agri value chain is so at risk with climate change, and how would that translate in Agri3?
Yeah, I mean, of course, in the agricultural sector, that there are huge challenges, ahead of also all the climate impacts that they can have on production, and models that might work right now might not work in the future anymore. But at the same time, of course, it's also a sector that is known to be a bit traditional. So changes take time, right? I mean, if you speak to farmers on the grounds, they are really often, in a different world than we in the West that are also convinced of everything that needs to happen. So I think there's a lot of work to be done there. And also, I think in that sense, you see all the complexity, in this sector of the West wanting to impose all the changes. Also, some resistance at farmers that say, it's easy for you to speak what we have to change, but this is the way we do this. So I think it's the main challenge is that there is a role to play for many parties. So of course, on the finance side, we can play a role by supporting banks to provide the finance for projects, but it's also the market that needs to provide the drivers to really ask from their producers, but also support their producers to make the change that's necessary. Because it's easy to ask, require you have to do this, but also to really, provide at the end the prices and the payments that are needed for all these farmers to invest in adaptation of their production, in changing to models that are more sustainable in all senses. Yeah.
May I jump on Casper's comments as well, Rick?
Please do.
Thank you. I think a couple of points to bolster what he's saying. First of all, in our State of Blended Finance report for the past year, we talked about the need for more local voices. I think there really has to be, domestic voices stepping forward, domestic financial institutions participating, and not always everything coming from abroad. So I was hearing a little bit of that in what he just said. But another related point, I think we're going to have a hungry couple of years on this planet. We are seeing disruptions in, the growing of crops, disruption. We're going to see disruptions in trade routes. We already have several countries where hunger has set in. And so I think that if donors want to make their money go far, they are going to have to think of course, immediate aid, but they're also going to have to think of how to double down on support in the agriculture field, agribusiness, and agricultural logistics and agricultural financing. So I think the area that that he's working in is just incredibly important right now.
Thank you for the additions. It's almost a bit bleak then, right? Would you say, Joan, if in that sector, and well, with blended finance being quite complex as we've seen, deals take quite a long time. When urgency comes knocking, like, can we make it simpler, quicker? What could it boil down to, Joan? I will also pose that question then to Megumi and Casper, but
well, it would be helpful to have data on exactly how much of a blend is needed in every situation all the time. We're working on that at Convergence. I don't think we're ever going to get to a point where anybody in Megumi's shoes can say, oh, I know for a fact that 17 cents of donor money will get you $1 of Philippine banks stepping into the water sector. So I think donors have to get over the quest for perfection and absolute bulletproof argumentation and decide to just move when they're going to move, and then learn, and then publish and share results and have a feedback loop started. But I think that quest for absolute perfection of blend is something perhaps we need to get away from. I do respect the importance of not over subsidizing anybody and distorting markets. I respect the point about being very efficient with taxpayer or philanthropic money. But I think we need to move sometimes and just get things standardized so that they happen. And especially when, like I said, the world right now is not in its best moment.
Maybe I can just jump in?
Yeah, please do.
Yeah, thank you very much. From my point of view, which is a little bit biased on the government-to-government experience, I think that as I have explained in the case of a Philippine Water Revolving Fund, having a sector policy there is a very important, I would say, catalyzer for blended finance to happen, both from the public side and also the private side. The reason is that when there is a good policy, for example, how to make these non-credit worthy utilities grow, I mean, there's a reason to build in subsidies for a certain period of time. We need that reason, policy reason, and then fit for a scheme fit for purpose with good narrative on that the private sector can come in. We cannot do a kind of like a choosy competition whether to subsidize this or that. That's not the way we go. We have to have a framework, and then we can argue that this support is very important and necessary to the point. Thank you.
Thank you, Megumi. Casper, yeah, in previous discussion, like in preparation, we also discussed like over subsidizing, or maybe that would result on your side, maybe on different pricing of the guarantees. Like, do you have any thoughts on that final point?
Yeah, well, it's of course the eternal discussion about pricing, and especially the concept of blended finance in that sense, I think, can also lead to a lot of confusion often in the market. I mean, because there's so many forms that we see also in practice, right? If people hear about blended finance, say, "Oh, great, I will get a loan for free and you will cover all my risk." I mean, and unfortunately, that's not what we can do as a fund. I mean, in our case, our concessional tranche is really important for the fund because it allows us to do all the work we're doing and cover certain risks of the partner banks we're working with. But we cannot do that, for free. We still need to make some return to make the whole structure work. And of course, I think you have to be critical about that because it is possible to distort the markets, and you have to see, what works and what's really necessary for this client to make this step that you want them to take. Mm-hmm. And also there, I think, often the challenge is that in the developing world, of course, we speak about interventions and tiers of change and steps that need to happen and impacts that you want to measure. But if you're talking to a company, a farmer, he doesn't think in terms of interventions and KPIs, and no, he has a business and he wants to have a sustainable business. These are the clients we like to work with, that lasts for a long time, also with his kids, and he's open, to do the right investments to make that happen. So you really have to be able to speak the language of these companies and combine what we want to achieve with what they can do. And I fully echo what Joan's saying there. It needs to be straightforward and simple to clearly define that this is where I can help you, and not over complicate with all sorts of additional conditions from different investors that all need to be checked and make it complicated. So
yeah, is maybe to round it up, that would be the last question then. Is that the are we at that point still that we need to get everybody on the same page, Joan, on this, like combining these narratives? Are we all on the same side? Are we trying to get the same things done, or is that still is that work in progress also for Convergence? Because
yeah, definitely work in progress. We deal with the official donor community, and then we deal with, the very hardest of investors who are, institutional investors, pension funds, whatever. And I would ask that people not expect each other to believe in the same religion. If you want to get trillions of dollars from pension funds into very poor countries, don't ask them to understand everything about impact and metrics and the SDGs, although they're learning that stuff. Figure out what it takes to get their money in. And then those who have the concessional money, those who are creating shaping the transactions, like, Casper and his peers, you can shape things to get impact. You can shape things to make careful use of concessional money, and still serve up something that is digestible to the money that doesn't understand and can't take the time to understand all these nuances. So the trick is in structuring something that works for several kinds of capital, and not expecting everybody in every transaction to have the same goals or even come from the same world. If you can do that, if you can have disparate forms of capital and disparate objectives in a single transaction, you'll get more money into what we actually, those of us who will work on the SDGs all day long, we'll actually get more money working on our objectives. So that's my view of it.
We need to be very inclusive on it.
Yeah, don't just switch languages for every crowd and get the deal, get the transaction done, and get the impact going.
Well, I think that's a wonderful note to end with. I would like to thank you for joining us today. I would like to thank our speakers for taking us through your activities and sort of showcasing what's out there and being quite honest in providing the feedback and having this discussion with us and with the audience. We will, of course, share the slides. Maybe as a final note to our attendees and delegates listening in, after this session, we will send a short recap note on it to also request some of your input for a session on day 3 on digitization of financial institutions. Hope to see you all tomorrow. Stay around if you want to schedule some meetings still. Thank you for your time and attention. Thank you so much.
Thank you, everybody.
Thank you. Bye-bye.